Bitcoin has seen a strong bounce from the major $60,000 area of support, resulting in a move to 68k and breaking out of a 7-day long downtrend. Will the bulls continue to push the price upwards, or are the bears going to step back in? In today's video, we're going to be doing a comprehensive short-term and macro analysis. Let's dive in. Okay legends, welcome back to the channel. Thank you for tuning in. I hope you're all having an amazing week. In today's video, we are going to be discussing Bitcoin from a short-term and macro perspective, going over exactly what is happening with the price action, what to expect going forward, and how the macro charts are still very much suggestive of high time frame strength. We'll also be discussing the recent announcement from the Federal Reserve, the interest rate decision, and so much more. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us over on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, with Bitcoin, and the relevant economic news. If you're interested in taking your trading to the next level, join us over on VIP. I have over 600 members. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You can see amazing profits just in the last 24 hours on 2 separate Bitcoin longs. You'll also get access to group chats, our general chat, our trading chart and education chat, our trade setup, help, daily video, and news chat. If you're interested in getting access to this community, go ahead and contact us in the pinned comment of the free channel for more information. You can also click those links. Let's go ahead, guys, and dive on in. So in the last 24 hours, Bitcoin has seen a strong reversal from our major $60,000 area of support. Now, the 60k area of support, as you can see, was this major area on the higher time frame, which was represented by this area of support, which we discussed many times leading up to that bounce. And we talked about how the majority are usually wrong and the bias are usually late. And we also discussed how the bottom of this move would likely be much higher than what most were expecting. And that support is support until it is not. And we had to trust that that 60k area of support, being that of which a major area of high time frame support, would put up a decent fight. And that is why we took considerable longs at that level. You can see a long we took over here at 60,865, and another long we took over here at $62,000 just as we approach that area of support. We've seen a solid bounce around level. The big question is, are we continuing higher? How are the charts looking? And if so, where are the targets? So we'll get into that in today's video. We'll also go over, guys, the macro charts in regards to a couple technical indicators I want to show you on the monthly chart that's very much suggestive of a high time frame strength, and that the bull run is very much still well along the way. And of course, we'll finish up discussing the current weekly candle, discussing what is happening with this price action and more. So starting on that market data, how are we currently looking for today? 24-hour volume, guys, let's go ahead and jump into it. Down 5.27%, sitting at 315 billion. 24-hour liquidations down 44%, sitting at 407 million. Of the 407 million, we can see a very even split of 202 million from longs and 204 million from shorts. That tells us during that correction, during that move toward the downside, we had a bunch of over leveraged positions in both directions. Half people were expecting up, half people were expecting down. We have seen that chop liquidate those long positions and now come back up and liquidate those short positions. Moving over to the broader markets, we can see the DXY has slumped toward the downside, breaking back below that short-term downtrend that it actually broke up from over the last few days. Of course, this was very much peddled by the fact that the interest rates came out, which resulted in a pause. We'll come back and discuss that in just a second. Moving over to the broader markets, S&P 500 continuing upwards aggressively again. Like we said, while we remain above 5,100, we are expecting continuations higher. It is only if we drop below 5,000 will we then expect a correction on the short term. Dow Jones has reached our $40,000 $1,000 target ever since we've been talking about that target all the way back in November 2023. It took multiple months, but we eventually got there. Again, like we said, while we remain above 39,000, we are expecting 40,000. Provided 38k holds, we are not expecting a higher time frame correction, expecting continuations higher. Moving over to the economic data, guys, we can see, of course, the Federal Reserve paused interest rates, and that was expected. There was like an 98% chance that we're going to pause interest rates, but the reason the markets have moved so aggressively upward is because of what they've said in their meeting. They've said in their meeting after the interest rate decision that they are still planning on reducing interest rates, cutting interest rates at least 3 times this year. And as we know, like we said before, the market moves on perceived systematic risk. Perceived meaning what the market expects a future period's risk to be. If interest rates are meant to cut, the later periods are meant to facilitate a lower risk environment for risk assets. Therefore, the perceived systematic risk, systematic being elements of risk that is uncontrollable by investors, okay, decreases, and thus the market moves upwards in preparation or expectation for those events. They also announced that they are likely going to see this lot of interest rates cuts end sooner than expected, and that could line up with the fact that we are going to see an earlier top in the bull run between probably November 2024 and March, April 2025, and then an earlier start to the bear market, lining up with that left translated cycle theory. So before we get into Bitcoin and all the cryptocurrency stuff, a quick word from Bitget and BingX and we'll dive in. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's jump over and get into Bitcoin's price action. So a lot of people were expecting Bitcoin to go down to 52,000, 50,000. Hell, I saw some comments on my video saying we're going to 40,000, even 20,000. Absolutely wild stuff. The most fundamental rule of when you're looking at support and resistances are areas of support will remain at support until proven otherwise. In this particular instance, what we saw was Bitcoin was moving in a 2-week long downtrend. Of course, we saw this downtrend represented by a multitude of continuous lower highs developing on the price action chart, and of course, lower lows developing on the price action chart. This developed a structural formation called a descending channel formation. A descending channel formation is an inherent downtrend, of course, but it is representative of a bullish reversal structure. The reason it is representative of a bullish reversal structure is that generally when we are moving in this downtrend, we eventually start to see momentum turn positive. And we saw momentum turn positive, breaking out of that respective 2-week long downtrending diagonal resistance on the RSI, resulting in a continuation through this downtrending resistance, breaking over that prior lower high point, resulting in not only a breakout of the 2-week long downtrend, but of course the entrance into a new uptrend. So Bitcoin is now officially in a short-term uptrend, officially when it broke above this area of resistance. Now guys, we take a look at the price action here. This was going to be our monthly opening price. We discussed this in our prior video. Our monthly opening price sitting around that $61,153 level. A key area of support, as if we were to lose this level, the monthly candle would turn red. This is an area of massive support, which we did see the price action bounce from. So we're taking a look at the price action here from a structural perspective, doing a measured move of the channel from the high, okay, to, again, the bottom of the channel in terms of width to the first low. We then apply that to the breakout point. The perceived breakout direction is going to take us back to retest our initial high. This is all the way to 74,000. So provided we are able to remain above this support, which is sitting around 65,000, the expected target is up to 74,000 as a target from the breakout of this descending channel formation. Now that doesn't mean it's going to be smooth sailing upwards. For the bulls to continue the price action upwards, they need to break above two key levels. Number one, they need to break above this particular lower high, as this area is representative of a major area of prior resistance. We saw this area act as a resistance for many, many days before we saw that eventual continuation to 74k. But of course, it is going to be now that POC level, the point of control, the price area on a horizontal scale of the highest historical area of resistance and support. It is the highest area of trading volume. So we have a whole cluster of historical price action happening around this area, and thus it is going to be, in the future tense, a harder area to break through in terms of resistance, and if we do break through it, it's going to be a solid area of support. Looking back at the past, what we did see when we broke above this level, we saw a large move up to that 74k range. We are expecting a similar reaction if we do break above 69,000. Thus, for a short-term continuation upwards, we are expecting a break above 69,000 to trigger that move towards 74,000. So overall, we are looking good. We have broken out of the descending channel. We have very much got positive momentum, but we have not quite broke over that next short-term resistance that could facilitate the continuation upwards. If we're taking a look at a higher time frame, a broader perspective, the main trend line we need to be breaking above here, guys, is going to be this downtrending diagonal trend line. We spoke of this one many weeks back. This downtrending diagonal trend line on the RSI is a representation of the momentum within the entire cluster of price action. I'm just going to go ahead and put a box around it. The entire cluster of price action ever since the break above that major 60k support that we just retested. So this is the break above the 60k support. Okay, we can see that break above is reflected, by the first point of retest on the RSI. We have then got our second point of retest, which is going to be that second retest of the trend line, and we have now got that third retest. So if we see a break of that RSI trend line, that is going to signify that the momentum within this area of price action moves from decreasing, we've had decreasing momentum ever since we retested and broke through 60, into increasing momentum, which should facilitate a break above that initial range high at 74k. So if we see a break on that RS on the 4 hour, that is going to continue result in a continuation through the 74k resistance and a potential move to 80, maybe even higher. So overall, on the 4 hour, we have not quite broken the main bullish trigger we need for a macro continuation yet. On the short term, however, we are very much looking good as we have broken through some key levels we need to see for a short-term continuation. And for that micro continuation for the next leg up, we need to get above this range. So the bulls are in control now. They are developing their strength. The biggest question is, are they able to maintain that? We need to see a break of 69k for the continuation. So let's now talk about the bearish case scenario. It is no doubt the bears are out of control, okay? The bears have lost control now. They had control during this entire downtrend. However, they were unable to push the price below that major area of support. Like we said, this area of support was a critical one, as a breakdown from that 60k support resulted in a potential range of price action, which was reflected by this massive VRPV gap. Now, we know this is a major support as per what we have seen in the past. We also know it's a monthly opening price, and we can also see on the VRPV significantly drops off after that point, telling us that this area here is a major area of support before an inevitable cliff, meaning a loss of 60k would have resulted in a large volatility move, potentially to around 58,000 or even lower. Thankfully, we did not see that happen. Now, that doesn't mean If we see that occur, what I just said is invalid. If we somehow, and I'm saying somehow because I don't see it happening, but if we somehow come back down and break below 60,000, we will be entering that VRPV gap, and the price targets of 58, potentially 52. Again, like we said, in all of our videos for the last many weeks, while we remain above 60,000, the probability for a continuation upwards significantly outweighs the probability of a correction lower. It is as simple as that. The trend is your friend until it ends. You have to trust the areas of support will hold while we are in an overall uptrend, and momentum is again overall pointing toward the upper side. So overall, guys, short term is looking pretty decent. Let's go ahead and move on. This is going to be our weekly chart. The weekly chart is looking pretty decent now. Remember, yesterday's weekly candle was looking horribly bearish as we engulfed that prior weekly green candle. That would have been absolutely awful for Bitcoin's price action if we did see that. Thankfully, we bounced at our major $60,000 area of support. The $60,000 area of support again was basically a last line of support as it retested the prior all-time high all the way back in March 2021 as an area of support, resulting in a bounce upwards. Now, like we said already, for that macro continuation higher, we do need to break not only on the short term above 69,000, but if we do break above 69,000 on the short term, that is going to result in a break over that 2021 all-time high. And we can see that we have yet to close a weekly candle above that level. So if we do want to see a macro continuation upwards, we would need to break above that $69,000 short-term resistance as we discussed on the short-term chart. And of course, a weekly candle close above that level would just perpetuate the strength on the higher time frame, confirming a weekly candle close above the 21 all-time high and a continuation upwards. So overall, guys, again, while we are in this cluster between 65.6 and 69, we'll show in the short term again, the cluster between 5.6, which is going to be this area between this area of price action, is representative, okay, of the area between the highest point reached in 2021 and the weekly candle close of that candle. It is a major area of contention. A break up on the weekly chart for a weekly close results in a continuation upwards. A weekly candle close below this level results in a move back down to 60K. So we're definitely watching for reactions at that level. So very interesting, very important. Keep your eyes on it. Let's move over to the monthly chart now, discussing something else that is very important. If we go over to the monthly chart over here, we can see, let's just go ahead and adjust to scale a little bit better, guys. We can see that the monthly breakout of the prior all-time high is what triggers, okay, the parabolic phase of the 4-year cycle, of the bull run. And furthermore, we can go ahead and confirm this with a specific RSI trend line, which is going to be our 80 point on the RSI. So let's show you from a structural perspective and then overlay the momentum in just a moment. If we look at prior price action, we can see the volatility significantly picks up. I don't know if you can see that. Let's go back to orange. The volatility significantly picks up the moment we get that monthly candle close above that prior all-time high. A monthly candle close above the prior all-time high results in a parabolic rally to retest, or at least to reach the next all-time high in Bitcoin's price action. Okay, so we are expecting that parabolic phase for the bull run, where altcoins go up, you know, significantly, where Bitcoin's flying. That has yet to come according to our macro charts. And if we actually go back, and I would actually advise you to go to our free channel. There's a video in here I posted yesterday. It is a video over here. This is a video from the YouTube channel from all the way back in November 2022. This was when Bitcoin was at 16,000. We told you at 16,000, for the next year, for the next 12 months, we're going to see a strong continuation upwards. And that we expected in May 2024, that we would see the parabolic phase of the 2024 bull run start. You can go watch it, guys. We have hit the nail on the absolute head, predicting the bottom, even predicting the parabolic phase starting in May. So based on my prior analysis, I do expect the parabolic phase to start in May 2024, which is going to be again just after the halving event. That does mean we are expecting at least 1 to 2 months where we could potentially retest or break through 69K, then we were going to see that parabolic phase. When we look at the break above that prior all-time high, we have to also look at the RSI trend line. What we have noticed is that upon the breakout of that prior all-time high, the RSI crosses the 80 points. So we'll show you over here and we'll show you over here. Upon that breakout of the RSI, we break of that trend line, we break above the 80 point on the RSI on that month or a month within. So again, this is significant as we enter that higher area on the RSI, the overbought area on the RSI, where we generally enter the parabolic phase of the cycle. So has the parabolic phase of the cycle yet occurred? It has not. It is coming. We have not actually activated that parabolic phase yet. We need to close a monthly candle above 69,000 and we need to get that RSI above 80, and that is when we should expect to see those strong and large gains. If none of that happens, then we're not going to see the parabolic phase, but if we do see those two validations occur, we should then see that parabolic phase of the bull market. So let's go over to one more chart, guys, and that is going to be this chart over here. This is, of course, let's just go over to, I think we're going to take a look at the weekly and get rid of some of this stuff over here. We can see on the weekly chart, actually it is a monthly chart, my bad. Sorry guys, the monthly chart. We can see on the monthly chart, we've got two indicators I want to show you. First and foremost, the market cipher A, and then secondly, I want to show you the Ichimoku cloud, but primarily focusing on the baseline, which is that red line. So let's talk about the market cipher A first. What we notice with the market cipher A, we can see that when we print a blue triangle, okay, and again, you're probably thinking, why are you telling me this now? Well, I didn't, I told you when it happened. I'm just going over it again. When we print a blue triangle, okay, we generally see a strong continuation to the all-time high, and we do not cross back under the 1715 EMA until after the high is in. What does that mean? If we see a cross of the 1715 EMA, okay, on the monthly chart, that could be significantly or could indicate the top has already been in. So if we see an expected pull down or an unexpected pull down, which results in a breakdown of the 1750 EMA crossing over from the top side down, that could tell us that maybe the top has already occurred and we are all wrong. This is a warning sign. So this indicator is to serve like as a fail-safe, as like a safety net, or as like what we call a last resort to tell us that in fact the top has actually occurred and we're all just missed it. We all just missed it. So we do see that 1715 EMA cross, okay, we could potentially see, again, the top has already been in. The next one is going to be the market, the Ichimoku cloud baseline. The Ichimoku cloud baseline, again, guys, we told you when we closed a monthly candle above the Ichimoku cloud baseline, we went into a macro uptrend, and we do not expect the bull market to end until, okay, we enter back below it. So this isn't to predict the absolute top. This is to predict when the bull market starts and when the bear market starts. That's what this is for. The bull market starts when we break above a monthly candle on the Ichimoku cloud baseline. We can see over here. We can see over here. Again, we can see over here. And the bull market ends, or the bear market starts, when we break a monthly candle below the baseline over here and over here. So again, if we see a monthly candle close below the baseline, that could tell us we are entering a bear market and thus the top has already occurred. These are two indicators I am watching more specifically as we move to the end of a cycle to look at when the bear market particularly could be starting. Something to keep your eyes on. Overall, guys, let's finish up really quickly on the total cryptocurrency market cap. Again, if we take a look at this chart, this on the chart on the left is going to be our Bitcoin chart. On the chart on the right is going to be our total cryptocurrency market cap chart. There's one particular area I want to focus you on. This is going to be this green line over here. This green line is when the Bitcoin price action broke over that 2021 all-time high. This green line is reflective as this green line on the total altcoin market cap. Look where the altcoin market cap was, okay, when Bitcoin broke above the 2021 all-time high. Look where the altcoin market cap is now when Bitcoin is breaking above the 2021 all-time high, the 2017, 2021 all-time high, okay, and compare the two. So when Bitcoin broke above that 2017 all-time high, the altcoin market cap was underneath the dead cat bounce high from the prior bear market. When Bitcoin is breaking above the 2021 all-time high, the altcoin market is underneath the dead cat bounce high of the prior bear market. That tells us that historically, okay, altcoins are performing at the exact same pace, okay, and an expected rate as what we have seen historically. This is a good sign, as it tells us again, we would expect altcoins to go parabolic when we break above that dead cat bounce high, which is sitting at a market cap around 837 billion, and that is going to be triggered, okay, when Bitcoin creates that first major leg up and then correction from the breakout on the monthly chart above the 69k region. Thank you for watching. Have a fantastic day. We'll catch you guys on the next one. See you then. Bye.